Good morning, everyone. This is Doug Campbell with Right Way Options and the morning market preparation video for October 18th, 2017. Well, I got to tell you, yesterday I had to take a quick trip to see my back surgeon, and while I was sitting in the office, I saw that the close of the market. And then on my way back, on the drive back, I was kind of flipping through radio channels, and the top story that just kept hitting over and over and over was the Dow hitting 23,000 in the day. Even the president decided to take time out to make a comment on the Dow printing 23,000 during the day. So my first thought, my first inclination was that's going to bring out all of those folks that have been sitting on the sideline or just predicting that the market absolutely had to fall. It's up too far. It has to come down. All of those folks sitting on the sideline were going to suddenly be under tremendous pressure and feel the need to rush in. And and it's one of the reasons I always look at the diamonds first. I always look at the Dow first. It's because that is the headline number. I understand it's not the biggest index. I understand it probably doesn't have the biggest volume. It can't have the biggest volume. But it's also the index that is the first reported and the one that always hits the top of the news. And because of that, I always look at it. It's kind of my first or go-to place when I'm looking at the overall market. And sure enough, we're getting a big pop this morning, gap up open, that we want to be a little bit cautious of. One thing we don't want to do is become complacent and chase this market. If you're going to enter new trades, make sure you're buying them at low risk entry points. Don't chase a trade here. We can also see big gap opens like this create whipsaw price action. And what I mean by that is the market initially starts up. We get this big move up, and then we suddenly shift lower, okay, intraday. So we can get these that whipsaw type action that is really difficult to handle sometimes, particularly for those who chase, because it will get that really quick pop up, that pre-market pump up. Everybody's jumping in, racing in, hurrying up. We're missing out. And then almost immediately after the market opens, we catch a sell-off. And that sell-off can be strong. And if it happens to sell off more than that initial candle, it could actually fall below. We're opening clear up here. We could actually see that fill that dip or fill that gap. And then whip back higher. So for those who chase into this, they can sometimes get whipped out right away, just get completely thumped on. Also, we never know if that third pop, where we gap up, we whip down, if that third pop will actually come, depending on how deep that selling happens. This could be the end. And so those who chase up in here, those who get complacent, those are the ones that usually end up getting their head handed to them. So be cautious this morning. Don't chase in. Yes, we're extremely bullish, and there's no reason right now to not be bullish this market. That doesn't mean that you should blindly chase in without a good plan. And be a little bit cautious this morning as we step into this market with such a wildly bullish gap up after such a tremendous run. Right now, again, let me reiterate, I do not see anything in this market anywhere that suggests bearishness, okay? So I don't want anyone to think what I'm saying here is bearish. It's not. In fact, all you can see right now is just wild bullishness. I think the bears are running for cover, to tell you the truth. Let's take a look at the SPY. Now, anytime I say something like that, you have to also realize that at some point in time it will end. And you never know when that day or when that time is that it will end. And that's why you don't want to chase this, because it could end today. We don't know, and I don't want to predict that it's going to end today, but it could. And so you want to always have a plan and be wise about how you trade, okay? Just be careful. Chasing has never been a good method of trading, all right? Plan your trades by at or near price support levels, not at potential resistance levels. So we're gapping up here on the SPY. Again, new record high on the SPY. Let's take a look at the Qs. New record highs, looks like at the open. Gapping up to that, just continuing this very strong run in the market. IWM slipped a little bit yesterday, slipped below our little box here. And this morning, it's also gapping up back into the box. We'll want to watch this and see if the overall market can start to pull this up and break this out. We'll have to wait. I don't know if it'll happen. I would hate to see the IWM break ranks from the rest of the market, because this could be our first clue that there's a little bit of trouble in paradise. Okay, so watch it close. We don't want to see this breaking down while the rest of the market is screaming higher. Let's take a quick look at the VIX. Now, it's interesting to me that we moved up strongly yesterday, but we had the VIX increase in value. That's interesting to me, that there's starting to build in maybe a little bit of fear that we're kind of running away. I don't know if that's the case here. What I want to point out here by looking at the VIX is to just realize that complacency, being complacent, not having a plan, blindly chasing a rally like this can be very, very dangerous. So make sure you have a plan. Make sure you're not being complacent. Be focused on that price action, and if it starts to roll the other direction, have a plan to protect yourself, okay? Very, very simple stuff, but it's also one of those things that a lot of folks will miss out on. Let's take a quick look at, I want to take a quick look at T2122 today. And you can see T2122 has pulled back. Okay, so we are actually not in a danger zone here at the moment, just imminent failure. And that's why I wanted to show you this. We stayed up here quite a while, but this relaxing that we've had in the market for a couple of days has allowed that to pull back. So this pop today may be bought into. We could see more pushing to the upside. And I would be kind of surprised to see the rest of this, if the rest of this week isn't just bullish. There's a lot of momentum behind this move, or behind the overall rally that's going on right now, and trying to prevent that or slow that down is a little bit like trying to, hold back the tide. That momentum will just run you over. Let's take a quick look at the calendar here. The economic calendar today, we don't have a whole lot on it, but we do have a couple of important reports. First off, we've got housing starts here at 8:30, and that's always an important number. And then the petroleum status report is generally an important number for the market. We're actually expecting to see a little bit of a pullback in the housing starts, a little bit of a slowdown maybe happening there. And, that could be just seasonality, whether we kind of slow down on our home building. And the petroleum status report, I think most people are kind of expecting that to continue to show increasing demand and decreasing supplies, but we'll wait and see. The beige book at 2 and the treasury budget at 2, these come out about 2 weeks before the FOMC meeting. They're mostly the focus of the FOMC. It's unlikely that they have will move the market at all, but these two definitely can. Also, keep in mind that we had Fed speakers, and I think they're already past us today, so they're obviously not moving the market as they did their thing. Now, on the earnings calendar, and this I'm we have unable to show it to you, but we have, somewhere around 80 companies reporting earnings today, and companies like AXP and all of just a slew of companies will be reporting different sectors and things all over the market. So make sure this time of year is extremely important that you are checking those earnings reports prior to buying something, and checking those earnings reports and making it part of your planning of the day on how you're going to handle those positions that are in your account right now. It may be okay to hold through an earnings report. I really never think it's a good idea to buy right before an earnings report. And that's often when we get a great buy signal. So you don't want to be stepping in front of a freight train. Pretty simple stuff. Stay away from that kind of danger. Okay, guys, I want to wish everyone an absolutely wonderful day. Great profits. Should see some great numbers this morning. Consider taking those profits as we move up into strength. If the pressure on that trade gets too great, take some money off. You can't go broke taking profits in the market. Hey, if this is the first time you've seen this information, please do me a favor and click that subscribe button and the follow me button on Facebook. And also, please, those thumbs up buttons are there for a reason. Click them. It really helps me in having those algorithms show my videos to more people. If you find this worthy, please feel free to share this video with your friends and family. I don't really do this out of the kindness of my heart or anything. It's just part of my daily prep, and I want to share that with other folks if it helps them. I've been trading for 27 years, more than 12 years full-time, and supporting my family from that. So if you can find this stuff useful, please feel free to take advantage of it. Everyone take care. Have a great, profitable day, and I will talk to you all soon.